Hello, YouTube. The S&P is set for a big move into 2024, and there's only two numbers that matter, 470 and 480. If we fall below 470, it's a failed breakout. If we get back above 480, it is a blue sky breakout. This will be very important because the exact same pattern is very similar here on QQQ, where if we're over 410, it is a blue sky breakout. If we're below 400, it is a failed breakout. This will be important because right now the S&P is poised to do something it has only done 3 times ever. Here's what it could mean for 2024 as it relates to history. As a quick reminder, last year when I gave my 2023 prediction, I said this is something that's only happened 5 times in 150 years. So we're going to go through and provide that update because we're just making history. But if a big explosive move is going to come, the average Wall Street analyst does not believe it yet, which means we're probably going to see some price target revisions. At a closing price of 47.69 for SPX, or the S&P 500, they think there's less than 100 points in upside to get to the median closing price of 48.50 by this time next year. The street high is 5,200 and the street low is 4,200. This will be important because if we're going to get that big move that I'm predicting, I think at least initially up, we have 6 trillion reasons why the market could see a little bit of a boost. We also want to note that all that extra money could potentially have a bigger problem after because we're currently in extreme greed. But with performance chasing, I think people are just going to start laying on the risk and we can go into extreme greed. I'm talking over 80. But before we do that, we also want to remind ourselves that right now is a very important time to look at Warren Buffett's quote. This should be no surprise to the audience. We've talked about how the stock market is a device for transferring money from the impatient to the patient. And finally, don't fight the Fed. Jerome Powell finally gave us the thumbs up. He finally said, hold my beer, time for stocks to go up. So let's talk about exactly what that means. Well, let's go back to S&P. So we talked about the significance of 480 and 470, but as we look here to our monthly chart, there's a very simple pattern we've been looking at. I'm going to go to candlesticks so it's a little bit easier to see. And the saying here is that we don't want to fight the Fed. So what's the first thing they do? They pause, then they pivot, and then we normally have a recession. All we have so far is number 1 here. So what does that mean? This is the Goldilocks scenario where we can probably keep going higher. And the pattern that we've talked about with Warren Buffett is really simple. It's a higher low. Low, higher low, higher low, higher low, higher low. We've done it for over 10 weeks in a row. And after we only made it to like the second week, people thought, oh my God, we're overbought. Time to sell everything. Time to go short. And the market went up a whole bunch more after that. This will be particularly important because if we go here to SPX, which has my current template here, we can know that there's a 5-step recipe. 1, 2, 3, 4, 5. Same thing happened here. So 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. We've gone over this over and over. So I'm just going to focus on number 4 and number 5 here. We have our 2020 template and we have our 2023 template. So reminder, what we're looking at here is the higher low pattern on the weekly where we just keep going higher, which is why I kept showing this quote over and over. Just have patience to see until we actually print that lower low. So right now, I would say that the weekly chart is a little bit more at risk of actually printing a lower low because we have a failed breakout and we're hovering around last week's low, even though we closed green. But to make the story really simple, let's go back to our monthly. And all we're looking at here is, again, for a 2024 prediction, not a weekly prediction. Here we are in November of 2020, and we have higher lows that form for over 10 months in a row. We only have 3 so far. So what does that mean? We could go higher a whole lot longer, just like we did here on our weekly chart, and almost no one believed it. Why? Because we went a lot higher. So if we're going to keep holding this pattern, it means that we could make it all the way up here to 560. Last time we rallied by 50% for 10 months in a row. If that same thing happens now, it's going to be a beautiful first half of the year. So the higher lows and higher highs are a really important pattern. As long as we don't form a lower low, the pattern, at least as it relates to Warren Buffett, should be intact. Hopefully you understand what that means now. If we look here to the prediction for 2024 now, what does it tell us? Well, it tells us that ever since the S&P 500 was formed in 1957, this has only happened 5 times. And what they're talking about is that from 1957 through 2022, the S&P fell by 15% or more only 5 times. But it actually recovered by more than 15% only 3 times. So the index rebounded by 15% or more in the following year only 3 times. The most recent example is 2008 and 2009. So what this means is that we're really hoping that if we're bulls, that everything's behind us. We're going to get the soft landing, like after 2009 was done. That was the big recovery. This also happened. We look here in 2008. The S&P plunged 38%, recovered by 23, but the next year it was up by about 13%. That's the important number here. If you look to the next one, in 2004, we were up by about 9%. If you look to the final one here, in 2023, we are up by, I believe it is 24% on the year. So that's 3 times. So that's what history tells us. It tells us that if we're green on the year, that is good. So now let's go back to our pattern and see whether or not these levels make sense. Let's go here to SPY again. It tells us that if we're above 480, we're in a blue sky breakout, and that is bullish. If we fall below 470, that's a failed breakout because we're likely going to go higher to start the year off. And then if we fall back below, we're going to lose it. That's exactly what happened in 2022, by the way. We went higher by 98 cents, and then we fell, and we fell a lot. That was the bear market. So please make sure you pay attention to those levels. That's why I said 470, because if we fall below 470, it means that we're about 10 points off that high. All right, so now we know that the average analyst doesn't think we're going to go very much higher. So above or below that 480 is going to be very, very important, at least for me. We talked about 6 trillion reasons why the market could go higher. We've talked about how extreme greed, if it holds up, is probably also going to squeeze the market. We've talked about how we have to wait for the higher low. And we've talked about how we don't want to fight the Fed. So what does that mean as it relates to this week? Well, now I'm going to go through and provide a little bit of more context. So let's go here to our monthly chart. And what this means is that we have to be ready for us to go all the way down to potentially as low as 454. That would be a monthly higher low. So again, Warren Buffett says, be patient until the pattern breaks. Before we get a monthly lower low, the first warning is going to come here when we fall to a weekly lower low. And I have the note right here. So the S&P warning is we currently have a failed breakout versus last week at 475.9. And then confirmation would come on a weekly lower low and closing below 473.29. It's that simple. Pause the video, rewind it if you need to. That is all we need to look at. For QQQ going into this next week, basically the exact same thing. 413 would be a weekly higher high. Let's make sure we got we have all the numbers here. I'm going to ask one more time, please and thanks. If you're enjoying the content, please smash that thumbs up and consider subscribing to the channel. I do publish stock market videos every single day. So for QQQ, we have the same note here. It is a warning that we got a failed breakout versus last week by falling back below 410.47, and confirmation of a reversal on the weekly chart would come when we fall back below 407.57. There's also other key pivots like our all-time high at 408, like the pivot here for 394.14, which is going to be our November high. And then otherwise, we're looking for potentially as low as 382. That is a lot lower than we are right now. All right, so that is the quick preview. Now, I'm going to go through a little bit more news, but I think I want to do this first here. So if we think about what could happen here, let me see if I can preview a few more things. So we talked about that. We talked about don't fight the Fed. I think what I'll do now is I'll actually just go here. So something new I'm going to try going into the next year. We'll see whether or not this actually stays through, but I have this Trello board, which has a whole bunch of notes on here, including all the news I go through, some educational topics. But in here, I have 2 things which are really important. I have the 2024 levels. I have the charts on here. And if you guys want access to this, please just drop a comment and tell me there is interest, and I will consider sharing this board with you. So we have the different charts here, S&P, QQQ, and ES. And then we have the levels here. It's very easy. Over 480 is bullish. That's a green light. We get a yellow light between 470 and 480, and a red light below 470. For the ES, it's very similar. And for QQQ, we've already talked about above or below 410 or below 400. As it relates to January targets, this is where it gets a little bit different. And again, I have all the different screenshots in here. If you want to go through and look at those, again, drop me a comment, please, and thanks. So for this month, it's 480 and it's 454. And it's really simple. We get those numbers from looking here at our higher high, and that's going to be here at roughly 480. I'm taking the all-time high just because the current monthly high is 477.55. I think that's close enough to 480 that I'm saying 480 is the number to claim. Between 454 and 480, that is basically between our lower low and our higher high. Really simple. We fall back below 454. That Warren Buffett quote is now telling us that it's time to be very cautious. Why? The potential for a crash dramatically increases. For ES, again, pause if you want to look. It's the exact same formula. And then for QQQ, exact same formula. We got 382 and 410. All right, developed market stocks eyed record US as US leads $11 trillion run. Lots of trillions in today's video. Biggest rally since 2019. And we've also already talked about how we have these analyst targets. I think they're going to have to move, which means the market's probably going to get a bump after we see those price targets get upgraded. Finally, if we look here to what could happen specifically into January, which is what we're going to focus on right now, we note that we're now at the end of the year. So we go up, we go sideways, then we start a new year where we go up a little bit more, then we come back down. We go up and then come back down. So if now we focus on January, what should happen? Higher high, then we form a low, right? Then we form a higher high, and then we form roughly a double bottom. I want to focus on January because that's going to be the next 30 days. I'll come back to that in a moment. Here we've also talked about how Fundstrat from Tom Lee, again, the most accurate Wall Street analyst for last year. We'll see what's going to happen this year. They've told us how after Volcker declared victory on inflation and Powell declared victory on inflation, whether or not this is actually what he did is questionable, but we went higher by a lot. 37 days, 19%. We were now up by 16% in like 40 days. Then what did we do? Up more, and then up more. Continued strength. We go up, we form a dip. We go up, we form another dip. That would be January and February. So January, February, January, February. Then we just keep going higher with higher lows and higher highs. If we look here to what can move the market next week, there's some really big catalysts for next week. There is Wednesday with the FOMC meeting minutes. I think that's going to be really important. We got the ADP non-farm payroll on Thursday, but Friday's the big one. Friday's when we have CPI coming out of Europe, expecting it to tick back up to 3. That's probably not going to be very good. But as we're focused on America, average hourly earnings are set to come down. That would be very constructive. Non-farm payroll coming down and unemployment going up. This is where I'm less sure. And I'll tell you why I'm a little bit less sure. Because if we're not fighting the Fed, it means that the Fed has conquered the market. We have a soft landing and there's not going to be a recession. What does that mean? It means good data should be good and bad data should be bad. Average hourly earnings going down is good. Non-farm payroll coming in low is bad. Unemployment rate rising is bad. Why? It increases the chance of a recession. So I'm not sure how the market's going to act into the end of the week next week, but I'm going to be very, very, very closely watching whether or not good data is good or if bad data is good. All right. So now we've talked about the seasonality. We've talked about what can happen in terms of the inflation and being conquered. Now we want to talk about one more thing, and then we'll look at some charts like I mentioned. So what I want to focus on here is the year-to-date performance. And think about this. I want to think about whether or not people are going to keep buying what has worked so well last year. I'm talking about the Mag 7, Apple, Microsoft, Google, Amazon, NVIDIA, Meta, Tesla. Why? Because of this. If these stocks did so well last year, meaning 2023, we're talking like big gains. We're talking 50% plus on average. Apple is the least high. It's the laggard at 47%. So what does this mean? If you sold these stocks in 2023, you now have a fat capital gain. You got to pay a lot of tax on that. So what can you do? Well, you can wait to 2024 to sell, and then you realize those gains as the year is starting. So what does that mean? You don't pay the tax in 2023. You pay the tax when you do your taxes next year or in 12 more months. So these stocks that have done so well could see some selling pressure because people are going to want to realize those gains into 2024 and not have them go against 2023. Notable names to watch would be all of them, but notably NVDA and Meta and Tesla, because they're all up 100% plus. So that's what I'm paying attention to here. Finally, if we go back here to our seasonality chart, now I want to show you how the seasonality chart and the monthly chart and the Warren Buffett quote all work together. We're going to look at a very simple pattern here one more time. So if we look here now, and we're going to go back here to SPX because this shows us our template. So what do we have here? Well, it's pretty simple. We're looking to November, December of 2020, and then November, December of 2023. If we look here very, very closely, we note that we get 2 green months, right? November, December. Here we get 2 green months, November, December. And then what do we get? Well, if the pattern's repeating, then into the next month, what do we get? We get a red candle. Yep, we get a red candle. That's what should happen into January. It's also my base assumption, even without the seasonality chart. But here's what I want you to pay attention to. What do? We go up. So it means we form a higher high, which we did right here, right? Let's get nice and close to make sure it's really easy to see. Make sure it's so easy we can't ignore it. So what do we have here? There's our December high, right? December 2020 right here. Then we form a higher high into January. Okay, so we form a higher high, but then we close the month out red. Yep. So we form the higher high, then we close the month out red. That's right. Oh, it's like exactly what happens here. It is exactly what happens here. And we form the higher low. And then if we look here nice and close into February, right back up to a higher high. What did we do the next month? Right back up to a higher high. And then we sold off into February. This would be right here, February 2021. What do we do here? Sell off into February 2021, but we form a low, higher low. Oh my goodness. Low, higher low, higher low. Yep. Oh my goodness, we actually formed a lower low there. All right, so into March, the pattern is even accurate again. So then we actually form that lower low, and then we skyrocket higher. So what does that mean? It means that if this is going to play out, we should get a candle very similar to this one here into this next month, which would be January. And to tie it all together, the exact same thing can happen on QQQ. But like I mentioned, this is now a weekly video. So I'm also going to provide a weekly update here. We talked about how if we're going to fall on the monthly chart, we have to look for a move as low as 454. But before we break that monthly pattern, we will get a warning, which we've already gotten on S&P weekly chart, and then we'll get to the confirmation. So the warning is we've already done this. We already failed to hold 475.9. The confirmation for a corrective wave to form would likely come when we form that weekly lower low and close below 473.29. For this week, those are the numbers. For next week, if we repeat here, we're not going to get it. We're going to go up a little bit more, and then eventually we'll form that lower low. So without wasting too much more time, that is it for this weekend. I really encourage you to watch the video queued up here on the left-hand side. If you want to take advantage of our December sale, that's going to end in one day. You can do that there, or you can subscribe to the channel over here on the right-hand side. If not, thank you so much for tuning in, and I wish you all the best of luck into 2024.